Hello, everyone. This is Dr. J coming to you from Long Island, New York on this long weekend that includes Thanksgiving Day. We last came to you with Talking Stocks, Professor Spike and I, on Wednesday before Thanksgiving. And we had a very disruptive Friday, as you can see by this red candle in the S&P. We were down quite a bit, 2.27% or 106 points. All of the averages were down significantly. And I just want to point out that I warned on Wednesday when things were nice and green and basically rosy, that there could be a correction in December, which is typically not a month for a direct correction. It's more like a Santa Claus rally type month. But I said it is possible that we're going to get a correction because all of the major averages were close to important turning points or points of support. And the one that I mentioned first probably was the S&P. So we'll talk about that one first. I had time to muse over things the last 4 days. The markets will open tomorrow, so I'm intensifying my musing and trying to come up with a logical position in my own mind. As you can see, we broke out of what looked to be a nice little trading range on Friday, closing below this important low of November 10th, 46.30. We closed at 45.94. So we closed considerably below that on the S&P 500. Now, where does that take us? Well, there isn't much support, as you can see, until you get down all the way here. There's a little support at 43.29, but really it's not until you get to 42.78 that you get major support, a turning point of significance. I call it a level 2 turning point or level 2 low because it's lower than this level 1 low to the left of it and lower than the level 1 low to the right of it. So I like to classify these relative lows as level 1, level 2. This one is an important low on October 4th, 2021 of 42.78. And I think we may, at this point, test this low. So fasten your seatbelts. We might get a little ride down, a considerable ride down off the highs. Another clue to this coming was back here on 11/8 when we got a gravestone doji with a low of 46.94, a high of 47.14. Notice that in the 2 weeks to come, that high was never, there was no close above that high. There was, for a brief moment, on Monday of last week, we actually rose above it intraday, only to close lower. So it tried to counter that gravestone doji, failed, and then we had a consolidation, a little consolidation on Tuesday and Wednesday, and then the big sell-off on Friday. That was due, at least in part, to the news of the Omicron COVID mutation. And on Wednesday, when I was telling you that I'm nervous about the markets, there was no talk of this mutation. But here it showed up and gave a reason for this close below 46.30 on the S&P. So here we have it. We broke support. And now the next support is really right around here at the 50-day moving average, 45.27. which would not be that terrible if that holds. But I have a feeling that may not hold, and we may actually get down to the 42.78 level that back on early October. So fasten your seatbelts. I think we could be in for a bumpy ride. If it gets that low, or close to that low even, I think it's a buying opportunity. This is not the end of the bull market, certainly. So I think, in fact, I think, and I said it on the show Wednesday, that 2022 will be a phenomenal year, another bullish year. So buying opportunity on a big dip here. I do think we may have that big dip. And again, who knows, tomorrow could be a strong up day, and news of Omicron could have been premature, and sometimes they try to scare us, I think. But I'm scared. When I have a lot of money in the market, it doesn't take much to frighten Dr. J. So I think it's a wise thing that you should be worried about your money. You don't want to just leave your money to the ebb and flow of the stock market. I know I say it all the time, stocks go up, stocks go down. That's normal, but you want to be in when they're going up, and you want to be out when they're going down, or at least hedge your bet. So maybe now is the time to hedge with a little S&P puts. I'm thinking it over. I also want to show the monthly on this, which I think is interesting. So let me show the monthly. Now, why is the monthly interesting? Oh, look what we have forming on the monthly. Looks like that scary gravestone doji again. Of course, the month is not up yet, so it's got, what, 2 more days? So let's see how it plays out. The shape of that monthly candle could change significantly, but I kind of doubt it. I think if anything, we'll just see a little bit more red, maybe the body extended down, but it'll still basically be a candle with a very long upper wick. That's my thinking. I don't think we get a significant bounce back Monday and Tuesday. Be happy to break even those 2 days. And if that's what happens, then the candle will look ominous. Again, the monthly shows very little support until you get all the way down to 4/20/20, the end of the COVID bear market from 2020. And that low was 24.47. Now that is scary, because you're talking about almost a 50%, 40% move off the top. So we don't want to see that happen, but you've got to be vigilant. There's also some support here at 32.09. So there isn't much support, and that troubles me, because if this thing starts going down and breaking last month's big green candle's low of 42.78, the same number we talked about in the daily, then it could be really big trouble. So 42.78, the number I talked about from the daily, is a key level. I think it holds, but if it doesn't, really, it could be disaster. So 42.78 is a super important number here. Let's take a look at another one of the market averages. Which one? How about, should we do the Dow? I don't know. Maybe the Qs. Let's look at the Qs. I don't want to look at the NASDAQ. I want to look at the NASDAQ 100 Qs. I think the picture on the Qs is even more ominous than the S&P, because don't forget that one went straight up, and there's very little, but there's very little support below where we finished, or where we're close to finish. I don't want to look. I don't want to look at the monthly, but if you look at the monthly on this, a continued weakness into Tuesday will give you a gravestone doji. So it's very close to forming a gravestone doji on the Qs as well. What I want to look at is the daily, maybe even the weekly. The daily is interesting. What we have here is a ominous looking candle that formed on Monday of last week that engulfed the Friday candle. So we have an ominous looking engulfing candle on Friday, big red candle. The Friday candle is not full bodied, which makes it a little less threatening, but nevertheless, it comes at the end of a very, very, very long rally. So this is scary. The key level of support was not taken out as it was in the S&P. So let's draw that in. The key level of support is this one, 1110. The low is 387. If that's taken out, it looks like we have practically nothing but air on the way down to the low of, again, October 4th, the same low I pointed out on the spiders, 350.32. Let's throw that in. Okay, so are we in for a dip all the way to 350? Well, if this key point 387.53 doesn't hold, I think it's possible, if not probable, but let's say 50-50, that we could wind up testing 350 level, which would make for a substantial correction off the top being 408. So you're talking about almost 60 points off of that, almost 14% correction. That is very plausible. On the S&P, I think it was more like 10. Here would be more like 15% the correction. Because we're up that much more. This is much stronger move than the spiders made, than the SPY made. So therefore, the pullback stands to reason that'll be a greater pullback. So look out below on the Qs if it breaks this key low. I don't want to scare everyone. I just want to make you aware that this could happen. I don't want you to be shocked and say, Dr. J, why didn't you warn us that we could be in a period of weakness in the month of December? Well, I said it on Wednesday, but I want to reinforce that today on Sunday, so that in case you missed it on Wednesday, you might hear it on Sunday. And again, let's see how this plays out. Maybe this holds. Maybe we're up tomorrow. Maybe we start making new highs. There's all kinds of maybes attached to charting. Charting is looking at probabilities. So that's what we got to remember here. It's probabilities. Let's take a look at the weekly, see if that gives us a different picture. It gives us a different but still yucky picture, because here we have a big engulfing candle on the weekly, bearish engulfing. So there's a lot to be scared of here if you have a lot of money in the tech area, in the NASDAQ 100 in particular. Scary looking charts, scary looking candles. I'm scared. I'm always scared when it comes to losing my money. So I'm going to be very careful about this and don't mind if I miss a little bit of a rally. I might very well be taking some more money off the table. I took some off the table on Tuesday, and I talked about what I took off the table on Wednesday. I'm now about probably 50% invested, which may not sound like much percentage-wise, but it's a lot to Dr. J. I don't want to lose 15% of my 50%. So, I might be hedging, I might be selling, I'm not sure what I'm going to do. And then again, it depends on how the day starts out tomorrow as well. All right. The diamonds, I haven't even looked at them. Maybe I'll give a look. The diamonds are a girl's best friend. I'll just look at the Dow instead of the diamonds. Same thing. Mirrors the Dow, so what the heck. Down 905 points, 2.5%. Scary, right? We haven't had a day like this in a very long time. Yucky, yucky day. And it's the third yucky day in a row of last week. So Friday, Wednesday, and Tuesday were all down days for the Dow, with Tuesday seeing the Dow make a new record high intraday. On Monday, we closed at a new record high. So this is a normal little pullback, perhaps. But if it pulls back too much, then we're going to be in for maybe a rude awakening. So let me draw what I think is support on the Dow. We want this level to hold right in here. This would be 33,271. Let's say 33,300, something like that. So that's 1,600 points below where we are, which we wouldn't want to see happen, but I think that would hold. And if that doesn't hold, I think it's going to be a sizable pullback, possibly. Well, I hate to say that, but I'm going to say it anyway. Possibly to this area right in here where we seem to have a few touches. Let's draw this in. Yeah, we have at least a couple of touches right in there. This low would be 28,902. Yucky, in other words, 6,000 points. That would be from here. 700 points would be 20%. So it's less than 20%, but it's pretty significant. It's yucky. We do have some areas of support, of course, before that, like the 50-day moving average. But the 50-day is above this key level that we're talking about of 33,271. So that's why the 50 is not, 50 may in fact hold. If I'm talking about what if this doesn't hold, the June 14th low. And if that doesn't hold, then the 100 may come into play. And notice the 100 is above the line I just drew. So the 100 would be at 30,224, about 5,000 more, which would be a more normal size correction. The other correction all the way down to that line would be rather extreme. I would think the 100 would probably hold here. So Let me draw this in as a straight line also. And then, of course, there's Fibonacci levels that I didn't look at. If it starts going down, I will take a more careful look at all of these averages. I'll do Fibonacci retracements, and we'll try to figure out where the carnage will end, if indeed there is carnage, if indeed there is blood in the streets. I'm not saying that there will be, I'm just saying be aware that there could be. This has been Dr. J, streaming from Long Island, New York. I'll be on Tuesday with Professor Spike and Arjun. Until then, happy trading on Monday. Hopefully we see green, not red, but be careful out there.